Hey everyone, how's it going? Sorry for the late start. I was on the closing playbook with Nate and Graham, so I went a couple minutes late and over. So I apologize for that. I hope you guys had a great day. Let's take a look at what's going on. Of course, the big news that's coming out right now is Nvidia earnings. I'm pretty sure they are already reported. Let's take a quick look. And looks like not a great reaction to that so far. It looks like we're at about 176. I believe the implied move though was down at only at 171 maybe. So we were implying a was earlier wasn't $12, it was about $11. 11.5 dollars off of where we closed. So that was about 170. So we're well within the implied move. So only about half the implied move downwards. That's going to put a tiny bit of pressure on the SPY when we open up tomorrow, assuming that this doesn't get bid back up. But nothing too major, nothing to get too excited about. So let's take a quick look over here at the SPY. And hi Kay, hi Lise, hi Nestor, hi Roger. You have been every show today. Yeah, I've been basically nonstop on webinars today. Those are a profit panel, VIP room. We had a webinar. I was on closing playbook, and now I'm doing my own post-market show. So yeah, I've been talking all day long. So if I pause a little bit, if my mouth gets a little dry, or my voice gets a little hoarse, I apologize. Let's see. They beat estimates. Market was not impressed by the forward statements. Okay, thank you, Carlos. Yeah, that's why earnings are always a kind of a little bit of a toss of the dice. There are things that we can do to kind of get an idea, but you never know for sure. And just because they did certain things in the past doesn't it has nothing to do with what they're going to do today. Although sometimes business cycles and certain businesses, certain market or business trends will allow us to kind of sort of predict what might happen. There's always something out of left field. And of course, it's always the market's reaction to the news, not the news itself. News creates volatility, volatility destroys technicals. So Nvidia was looking great before. It was looking like a nice little bounce right here and flat, really going sideways. You would call this a move up or accumulation. And then over here would be a, looks like a consolidation right here. And then, but after today, post market at 176, we broke that EMA 20. And still, if we look at it in terms of this zoomed out context on a day-to-day basis, it's not a huge drop, right? It's not a huge drop. 76, so that would be a $6.60 drop on $1.80. That's about 3 or 4% drop. It's not a huge deal. Look at this red bar right here. That was 3.5%. So it's not a huge, actually it's almost exactly that. That's funny. Look at this, where this red dotted line is, it's near the top of that bar. And where this blue dotted line is exactly the bottom of this bar. So, and we're very close. So it's almost the exact same move as whatever this was on this day on last couple Tuesdays ago. So that just goes to show you that this particular earnings move is not, at least so far, isn't really that big of a deal. So I'm not expecting that to really move the needle on the S&P 500 all that much. We talked about how the S&P 500 was trading sideways and choppy. We talked about how Friday, even with the Fed, even with Jackson Hole, that we didn't really get to make a new high. And over here, we had 2 inside days. I was expecting today to be an inside day as well, but it turned out to just kind of barely break out of the top range of this bar. And we did make a new all-time high today. I don't know if we closed at it, 646.63. Oh, maybe we did close at an all new all-time high, but just barely. It's just barely. So what we were saying earlier in the week, which is that most likely chop sideways, floating upwards. As long as everything was okay, we could float upwards. We wouldn't go screaming higher. It just might kind of drift a little bit higher. So far, that is playing out. Now, tomorrow morning, other than just NVIDIA, we also have CrowdStrike and Snowflake may have already reported. We do have a good number of healthcare stocks and retail stocks reporting as well. So any of those could kind of undo or balance out what NVIDIA is doing, or it could make it worse and make it go even further down. And then we have the GDP report. But again, after Jackson Hole, I just don't think this market is going to be super reactive to a lot of things. Now, I wouldn't be placing money specifically on that. So I wouldn't say go completely very tight, narrow neutral trades. If I'm doing neutral trades, I'm giving them nice wide wiggle room. And then if I'm doing a directional trade, then I'm going to most likely enter it as very short-term quick move upward, or I'm going to look at it as a neutral to mildly bullish and neutral trade. And so I'm going to try to capture those debit spreads like we talked about the last couple of days. So let's take a look. When does volume return? Holiday is coming up. Yeah, so Stefan, the holiday is coming up on Monday. And so most likely you're not going to see volume really return until at probably next Thursday at the earliest. Okay, so holiday weeks, especially Labor Day. Labor Day is like the last hurrah for summer in the United States. So a lot of people are taking their families on vacation. They take time off. A lot of junior traders manning the desk. We do tend to see this a little bit more of a crawl going into Labor Day and a little bit afterwards, but when people are just starting to come back. So it will affect trading volume usually for the entire week, but we start to see it normalize on Thursday and sometimes on Wednesday if it's a little bit earlier, but most likely Thursday. And then Stefan, I think you were the one who was asking me about Uber the other day. Okay, so Uber, yeah, that felt like a drop, and then it recovered, and then today it just dropped. Okay, so that's what I was saying about the nature of Uber. It swings back so much, back and forth. It's a volatile stock. So if you're going to be in Uber, you just have to learn to expect that. You're just going to swing up in your favor over the next couple of days, most likely, and then maybe swing back against you, and then it'll swing in your favor again. It was you? Okay, yeah. So right now, again, the market mostly neutral. Not really expecting any fireworks from GDP. Then we have the PCE, personal income. But right now, what this market is responding to is liquidity, availability of credit. It's not responding as much to the consumer. So yes, the consumer is really important and it's a major part of the GDP, but the money supply and the availability of credit is what determines whether or not businesses can expand, they can fund their projects, they can make investments into their own businesses, into their factories or metro, whatever it is their particular business model is. That availability of credit is really important. It's actually more important than the consumer. There's never been a recession because the consumer is really weak. What's happened is we started to see problems in the economy and then the consumer became really weak. Okay, that's what usually happens. We've never seen a recession caused by a weak consumer. They are a symptom of a recession, not a cause of a recession. But credit, like almost every recession, if not every recession, was caused by a dry up in credit. So that's something that we'll want to watch very carefully. Is availability of credit. Interest rates being lowered generally makes credit more available, more affordable, and therefore it is usually a stimulatory act. And right now it's no different, except the market has already priced in 3 rate cuts this year. So if we don't get that, then that's going to be a bearish sentiment coming into market. Now, what we've seen over the last couple months is that we've seen interest rate sensitive sectors like home builders, like construction and building products, right? They are starting to, and then they're starting to gain traction. That's the 1 month, that's the 2 month, and let me see, that's the 3 month, okay, and now that's even the 6 month. So we're seeing it basically across every single here. Do we see it on the 1 week? Or sorry, is this 1 week? Yeah, 1 week. Not the 1 week and not the 1 day, but those are really short time frames. So the home builders, the building products, those are hot sectors right now. Alternative types of energies like solar, like lithium related to uranium, like batteries, like electric vehicles, and then uranium is not currently on there, but it was on there for quite a bit. So it looks like we're taking a step back away from maybe uranium a little bit. It's probably just a pause or a consolidation. And that's what I'd be focusing on. Today, shipping really caught a bid. I don't know. I'll have to look into carefully why. And then a little bit of banking. You're seeing banking come up. So that's really interesting. So if we go over here, if we look at XBE, XKBE, there we go. Okay. Yeah, that's looking really, really strong. Okay. And so this is going to be strong in the face of SPY, which is just chopping sideways. RSP was starting to look good, but basically after Jackson Hole, it just tapered right back down. It just pulled right back down. And then QQQ hasn't matched that all-time high yet. So it's showing relative weakness. And what that means is that we're not being led by tech anymore, which is unusual in our modern age for a bull market to not be led by tech. And so that's a warning sign that other sectors, non-tech sectors, are kind of carrying the RSP and carrying the SPY into all-time highs. It's unusual that non-tech will carry us to the all-time high. They can lead for certain periods of time during a bull market because it's normal for any sector to take a breather and pause. But it's really unusual to get to an all-time high without the tech, at least since tech became really important at around 2000-ish. Right? So this is giving us a little bit of a pause and say, hey, maybe our bull rally is not so healthy. It's been an incredible 4 or 5 months right here, but it might be time for us to pull back. Earlier on Profit Panel today, Chris Pulver was talking about a pullback to the MA50, and that looks super easy right now. Super easy. A pullback to the MA50 would only be like, I don't know, maybe 4%, 3%. It's only 2.8%. Super, super easy. There's a pullback to the MA50 that would go a long way to reset a lot of things. So I'm getting a little worried. Like, I don't like earlier this week, I did say we did kind of open the door to drift higher, but we've been going for so long. A pullback is appropriate. We did get this dip right here, but again, another pullback, just 2.7%, 2.8%. It's not a big thing. So it'd be very normal for the market to do that. And of course, if we did that, we would still be within our box. It'd be completely normal for us to do that. And this would still be in this. What is that? Do that. Okay. So this box right here that we drew a couple days ago, we'd still be in this box if we pull back to that MA50. So it wouldn't be a big deal for us to pull back over here. The other thing that I'm not really liking too much is VIX. VIX hanging out here below at the 15. I don't think it can sustain this very long unless we are going into a changed regime, a lower volatility regime. But so far, there's nothing in this market to make me believe that we're going into a lower volatility, like a super low volatility regime. So this is probably going to revert. That doesn't mean screaming to 50 or 40, maybe just another pop to 20, 25, just maybe just like this, a quick little pop right here. And if we did that, what happened right here on Friday, August 1st? Well, that was the last pullback that I showed you guys right here, August 1st. Yeah, there's a little dip right there. This time it would hit the MA50. That's the only difference. So I am still net bullish on the market. I just think that we need to consolidate and pause. This is a little too much. The fact that Jackson Hole didn't really get us going, and then we now have almost a whole week, well, I guess half a week after that, we haven't really gone anywhere. Nvidia isn't doing us any favors. That means mags are most likely going to dip a little bit. You see that? Yeah, mags are dipped back to the EMA 8. So tomorrow, are we going to make another all-time high? It doesn't seem likely. And so we'll probably see a revisit of the EMA 8 tomorrow, which is not a big deal. Again, that EMA 8 is so close and it will continue to rise tomorrow. So hitting that EMA 8 is almost like a no-brainer. And then maybe over the next week or so, we'll hit that EMA 20. And then maybe, depending on, we'll have to see when it happens, maybe we'll get that pullback to the MA50. A little too far advanced for us to really be talking about the MA50 too much. But I just doesn't feel like this market really wants to go a lot higher. There's, we just needs a little bit of a pause and a rest, and then we'll see. Let's see what you guys are saying. 34, but great from trading. That's funny. That's hilarious. A lot of, yeah, trading, if you don't, I mean, even if you have the right attitudes and right mindsets, it can be very stressful. Yeah. Okay, let's see. Revenue, half a bill or 0.5 billion higher than expected. Earnings per share, 3 cents higher than expected. Biggest strength through gaming, automotive, and AI businesses. Okay, thank you, Carlos. Missed my entry on the tankers. They're really moving. Yeah. Did we STNG? We had those on our list. I got in a little too early. I thought this was it right here, and so I got caught this right here, and then I held it through to this recovery. For me though, the option, I did a shorter dated option, so I couldn't hang on to it. Basically, I just watched it recover. And then now we're still starting to go though, but STNG actually is looking really good. Really good. It broke out above this high. I like this a lot. I like this a lot. Yesterday we looked at MP. We got that off of a suggestion. We looked at the gamma pocket. That looked really good. STNG is looking really good. All right, we have the midterm or the longer term moving up like this. We have a horizontal starting to break out. We had last week, we had the short term revert to the longer term trend, but now that we've broken out of here, this could be a longer term trend. You could take this all the way up to potentially all the way up. Come on, why won't this line draw? Okay. Yeah, you could take this all the way up because this is a change of what you're seeing is longer term trends reverting to or changing direction to match shorter term trends. So what we're witnessing here is a change of trends. This MA200 flattening out, okay, not quite flat yet, but the shorter term trends are all pointing up. The 8, the 20, the 50, the 90, okay, that MA150 is already flat, that 200 is flattening out. This is most likely a change of trend, and that could go on for quite some time, because what we'll be looking at from here on out is if that MA100, 200 is moving up, then we're looking at a really long-term trend, and if we see short-term reversions into it, then all of those are potential moves higher. So this is a potential bullish change of trend right here. I mean, it's looking really good. It's really so I like that quite a bit, STNG. Hi, Tim. Tech is very heavily weighted in the S&P. So the fact that S&P hit an all-time high right here and closed at an all-time high is really telling, because tech, the QQQ, is quite a bit below its all-time high. FDA approved COVID updates for high-risk individuals. NVIX had a huge squeeze during COVID. Possibly there's a squeeze coming in the fall. I don't know. I think most people are over COVID. I think the COVID fears and scares, I don't think anyone's going to get super scared about it anymore. And so, yeah, if we have high risk individuals, they're going to want to do that. But I don't think it's going to be like on the market's mind. They're not going to have a huge, they're not going to want to put a huge amount of money into it, because unlike the first time around COVID, when basically almost everyone was required to get a vaccine except for the people who refused to, right? Then that was a huge adoption, and obviously the market would participate in that. But if we're just talking about a few high-risk individuals, it's not going to be something that's going to capture institutional interest. IWM. Yeah, IWM is looking pretty good. Pretty. That's quite a run. It has been having pullbacks, unlike the S&P 500. So this is looking like a strong run upwards as well. And then we'll see if it matches all-time highs. The problem is if the SPY really starts to struggle and peter out, then this won't last very long. Whereas something like STNG, as long as the economy is chugging, remember the economy and the stock market are not the same thing. So as long as the economy is chugging along, STNG, as long as we have international trade is in place, then those shipping stocks will do well. And the more tariff deals we get signed, the more likely it is that markets will get optimistic about those shipping stocks. Tankers tend to respect VMAs instead of MAs. I use those for possible entry points. Okay, good. Oh. All right, so those sectors are looking interesting. So we took a quick look at a shipping stock, and then another one. So if we look at Builder, this looks very similar to STNG, right? Let me remove, let me remove those drawings for now. Doesn't that look very similar to STNG? Okay, STNG breaking out of its MA200, looking like a short-term trend, but those longer-term trends are starting to move upward. And then if we look at Builder, same thing, broke above its MA200. That MA200 isn't quite flat yet, but it does look like it's flattening. The 20, the 8, the 20, the 50, the 90, all curving upwards. Okay, this breaking out above it. This is just like a slightly later version. So STNG moved before Builder did. So there's a lot of these kind of bottoming out type of stocks, or inside these sectors. And so that leads me to believe that at least on a longer term basis than we normally talk about, at least a 6-month basis, 1 month, 1 year basis, that these sectors are in for a bullish period. So I'm getting very bullish on construction, and I'm getting very bullish on shippers as well. By the way, I joined MPP last week and I created a compounding plan. It's working nicely, low stress. Oh, great. That's great to hear. Great job, Thibaut. You're very welcome. I'm the one that has a 180 put on NVIDIA and has already hit post-market. Great. Now the question is, does the volatility crush negate what, the price movement on your 180 put? Because it didn't move that big. It wasn't huge, right? So if we do here, you always have to be super careful. Your 180 put, I don't want to make any assumptions, but maybe let's just say you did at a 180 put right here, and I have no idea what you got in at, but let's just say you got in at the close today, and you got in at $5.15. And then tomorrow, are we already? No, we're not priced. That's good. Okay, so tomorrow, the 28th, and we're down at 177.39. Okay, so basically down $4. Okay, and then this would be, okay, theoretically you'd be at 762, but then we also need to build in a volatility crush. So if you recrush about 40, what was it, 115 down to 60, so 50% volatility crush. That didn't work. Well, in any case, yeah, hopefully you made money. I hope you made money. Get it, you got the direction correct. I'm curious, why do market makers raise IV so high for NVIDIA earnings when the realized move has been a fraction? Because they want to make money. And they know people will pay for it, right? NVIDIA is still a big, so obviously, right, we have a few members in here who are watching, they bought a put or they call, even though IV is super elevated, even though their actual realized volatility is not nearly as high as the implied volatility. And even though we didn't reach those ranges the last several times NVIDIA did earnings, there's still a lot of interest in it. And there's still a lot of people who will pay above, for extra volatility. And so the market maker is going to take advantage of that. Why? Because it's lower risk for them. So they will jack up the IV as high as they can and still have liquidity inside of the markets. Does that make sense, Cosmic Spiral? If I was a market maker, just same as us, right? If we wanted to sell our options, we want to sell them as the highest price we possibly can. And so the market maker is doing the same thing. They're selling their at the highest price that they possibly can, and still without spooking the market or without seeing a dramatic drop in volume in the markets. Okay, so let's take a look. Actually, let's take a look at what some of our saved trades have done. There's been a while since we looked at some of them. So McDonald's, let's take a look at McDonald's. MCD, so you could see that we felt that it could hit the 320 by the middle of September. It definitely moved up, and then it's been consolidating sideways for the past week. But since we did it as a debit spread, it doesn't really matter that much. It's still making a good amount of money. Newmont Mining, this basically should be closed out. That's the one we did a couple days ago, and they made a nice move upwards today or yesterday, just went sideways today. So I'm just going to remove this one. And especially since we didn't actually get into the trade, I put in that order at below, seeing if we could get in on a pullback, and it never did. So I'll just delete that. We don't need to follow that anymore. And MP. Okay, we felt that it would move up. It did move up 2.25% today. So let's take a look at our MP long call. So far, not bad, up roughly 15%. Not too bad. Let's look at our bull call spread. It says it's down, but that doesn't make sense. That's probably just the bid-ask spread. But this should be making money also. It's the bid-ask spread. So if we look over here on MP, this is why I always tell everyone, do not trust the mark, do not trust the mid. It's just some arbitrary thing. Right? So if we look at MP, and we're looking at the September 5th, 66.67, okay, there's 70 cents wide there and 30 cents wide there. So it looks like we lost money because this got so wide. If we use the last traded price, we would get a more accurate picture. So the last traded price, assuming these are liquid and there's transactions today. So this was $6.55. That was $5 last transacted price. That gives me a spread of $1.55. And what did we debit? We debited 90 or 65 cents. Okay, so that means we, in theory, where this should show a positive P&L, not negative, and it should be quite high, because $1.55 is 90 cents. It should be max loss, so 90 something cents. So it should be about 150% so far, which is kind of crazy. Oh, sorry, max profit. What am I saying? 35, 66, 67. Okay, so even that is a bad mark. Okay, so this one didn't trade for a really long time. This $5 one didn't trade for a very long time. So that's a bad mark. And this one, 655, well, it's above this ask. Okay, so again, on these debit spreads or credit spreads, you cannot trust the calculations, okay, because the bid-ask spreads widen way too much and they're not accurate. So you have to learn to get a feel for how well your trade is doing. So how do you get a feel for it? You go over here and you say, let me get a clean MP sheet. Can I? I don't know if I can, because I think these save across all layouts the way I have it set up. Clean MP. Yeah, all right, I'll just delete all these. So right here, we have 66, 67. So as long as it's above 67, I'm in my max gain zone. And then if we're at 66, then I'm in my max loss zone below 66. Okay. So, and somewhere in between is my break even. But look how far away we are. We are so far into our max gain zone, and we actually went a little bit further away into our max gain zone today with just barely, just baby. So we should be in profit right now. Just a baby amount of profit, but just some profit. Okay, so I wouldn't be worrying about that debit spread at all. It just marked very poorly. And then we have our butterfly, which is also doing well because we moved up a little bit. But of course, the closer we get to 75, the more money that we make. But we don't want it to get there too fast, otherwise we don't make too much money. The slower, I wouldn't say slower, but the closer to our timeline that it moves and makes it to 75, the more money that we make in this butterfly. Okay. All right. I've been talking a lot today, so I think I might end it pretty soon. Do you guys have any questions, anything you want me to specifically go over? I guess I would be happy to look at more stuff. Just I've been looking at so many things today and talking about so many things today. Let's see. Okay, I think I answered everything that's in the chat. All right. Let's take a look at one more thing. I think it's yesterday you guys gave me a lot of stocks that you wanted me to examine, but I didn't get to because we went deep on MP. So let's take I think I saw Apple a lot, and I saw Tesla a lot. Those two would be affected by NVIDIA. So it's not too meaningful to look at them right now. It'd be more meaningful to look at them tomorrow. Let's see, I gave you guys builders, I gave you guys STNG, or we looked at STNG. And then let's see if there's another. Let's look at a home builder, maybe. Let's try Lennar. Yeah, that looks pretty much the same as STNG and BLDR, right? So that's what I was saying. These sectors are coming up, and they look like they're entering a longer term phase of bullishness, and they're just getting started. So these are ones where either you could trade them long term, or you just keep coming back, buy the dip, buy the dip, buy the dip, or buy the dip, sell when it pops up, buy the dip, sell, and you just keep going back and doing that trade 20, 30, 50 times, 100 times in a year. Just keep going back and just playing that same thing over and over again, because overall it looks like it's about to go into a longer term trend. Okay, ETHE, I believe that's Ethereum. Ethereum is consolidating. It's looking pretty good still. I like Ethereum. Not bad. So imagine right here, this is what STNG, BLDR, and Lunar, they all look like there, right? They just broke above the MA200. We're going from flat, or in those cases, we weren't quite flat yet, but here we're flat to starting to go higher. This is looking like a longer term bullish trend is starting to develop. And so if you can imagine that on Lunar, STNG, and builders, that we could be looking at something like this, just like in Ethereum. And Ethereum longer term is still looking like it's quite bullish, right? So Ethereum is looking very good. And then Shell is consolidated so much, but we do see some encouraging signs. Okay, so that was basically the box that I was trading in. It broke out and today retested and bounced. So as long as it can maintain it, then basically what I want to see is 2 days of lows that are higher than EMA 8 and higher than the top edge of this box. Then I'll be more comfortable that this is breaking out, because we also have some mild resistance right here, right where we are right now. Okay. Yeah, we did see that. That's an important level. It's all the way going back all the way to 2018 and beyond. Okay, so yeah, this is actually a really important level. So if we can break out above where we are right now, 73, 75, or if we can break about, say, 74, then Shell will be looking pretty good. I'd wait for that breakout though, or maybe a breakout and retest. There's a gamma pocket there, but don't trust bar. Okay, let's take a look. I was going to do that, but thank you for the reminder, as it did slip my mind. Okay, there we go. We got one at 75, the major one at 75. Yeah, so it's looking pretty good. Like I said, if it can make above 74, then longer term we have room to go upwards. But 75, it looks like we could at least, very least, target 75. If we can get above 75, 77.5 is definitely in play as well. Okay. So looking pretty good. Okay. All right, guys, I'm getting a little worn out. My voice and my head are getting all a little worn out. So, okay, I'll do one more for Tim, APG. Simon Property Group. Okay, so this is probably, is this a REIT, or this is looking very good also. Or right here, this is, again, so if you take the overall principle that I've been showing you today, is this breakout above the MA200. This one's different because it went up then flat instead of down then flat. But this is basically the same premise. What we're seeing is this flat region, the important area being broken out of in this very much kind of a ascending triangle type of pattern. Okay, so that's an important level. You see it bounce off of that quite a bit. Okay, we broke out of that in this ascending triangle. Okay, and that's bullish. It's bullish. If this wasn't following that EMA 8 so well, I would say wait for a pullback and then bounce, but it's following that EMA 8 really, really well. So I would say just hang on. If you're already in, hang on. Otherwise, you're just looking for an opportunity to enter. Just either to pull back to the EMA 8 or EMA 20 and then entry. But this is not the one you asked for, is it? You asked for APG. I'm sorry. Simon Property Group is looking pretty good. Let's see about APG. APG is bullish, strong, very strong. Yeah, so this is very nice. A very gap up, run, gap and run, which is pretty rare. Gap and run and gap, and then consolidate, then run, then gap, then pull back, and then consolidate, actually. Very long consolidation period, which is appropriate after such a huge run. And finally, it looks like we're starting to break out. Why do I keep having trouble with this thing? Okay, finally, we're starting to break out right there. looks like. And so I would say the same thing here. I would want to see that high. I don't know how strong. Actually, it's pretty strong. That high is the same as today's high or very close to it. So I would want to see it move comfortably above. And it may take another pullback to the EMA 8 before it can comfortably do that. But that's looking pretty good. So this is good. So this right here would have been pretty good timing right here on Friday, because that's when the EMA 8 went from flat to positive versus the MA 50 consistently being positive. So a couple days ago was very good. But for now, I mean, it's okay entry. We're not so far above that EMA 8. So it's okay entry, but I would be setting entry points at the EMA 8 every day to try to capture further move upwards. That's looking very good. We can try to see if there's a gamma pocket here, but this is, what's the volume on this thing? 2.5 million. Yeah, I don't know if this is large enough cap for the gamma levels to be really meaningful. Yeah. Okay. Let's see what you guys are saying. Been presenting all day. Right, thank you. Great trades on Tesco and BK. Thank you, Zen. All right. One last one, Ford, just real quick, and now that's looking pretty good too, as long as it can get above this level right here. And again, this fits into that broader pattern we've been seeing, breakout, retest that MA200, and then go up higher that we've been talking about today. It seems like we found a lot that looked like that today. So here, pulled back to the MA50, bounced up, retesting these highs. If it can break above these highs, then yes, then it's looking very good. More likely than not, it'll probably break up and then retest, or from here retest EMA 8 or MA 20 and then bounce higher. So that's what I'd be looking for. Okay, guys. All right, that's going to be it for today. Tomorrow, I'm going to be on an airplane, so I will not be able to do the post-market review tomorrow, and then I should be able to do it on Friday, though. Okay. All right, guys. Have a wonderful rest of your day, and hopefully I'll see you on Friday. All right. Bye, everyone.